Hi, this is Sam and welcome to this week's market commentary. US stocks fell in Friday trading, giving the S&P 500 index its biggest weekly loss since June, as investors pulled money from exchange-traded funds and on growing signs that Federal Reserve will cut its stimulus this year. The S&P 500 fell 0.4% to 1691, while the Dow Jones Industrial Average dropped by 0.5% to 15423. The S&P gauge lost 1.5% in this past 5 days, halting the string of 6 weekly advances. The S&P 500 trades at 15.4 times projected earnings, up from a multiple of 13.1 at the beginning of this year, and holding close to a 3-year high reached last week. Better than estimated corporate earnings have helped equities rally this year. Of the 446 companies in the S&P 500 to have reported quarterly results this period, 32% have exceeded analyst profit estimates, while 56% have beaten sales projections. German stocks climbed late in the session on Monday, with the benchmark DAX index reversing last week's drop. The DAX closed 0.25% up to 8359 after the equity benchmark declined 0.8% last week. The gauge has so far rallied 7.8% from its low on June 24th, as the European Central Bank said that interest rates will remain low for an extended period of time. The Stoxx 600 also closed up by 0.6% to 306 points. Japan's economy slowed more than forecast in the second quarter as the businesses cut investment, undermining gains in consumer and government spending that helped reduce deflationary pressures. Gross domestic product rose an annualized 2.6% from the 3 months through March, when it climbed to 3.8%. The report on Monday adds to the debate on whether Japan is strong enough to sustain a planned 3 percentage point bump in the sales tax in April, with Prime Minister Shinzo Abe deciding in coming months to whether to proceed. While consumers continue to propel Japan's rebound, companies have yet to commit to the Abenomics project, pairing capital spending for a 6th straight quarter. The Topix was down 0.4%, while the yen fell 0.3% to 96.50 per dollar. The Topix has rallied about 42% since Abe swept to power in election in December, as he plans to deploy monetary and fiscal stimulus along with the structural reform to end the 15 years of sustained deflation. Emerging market stocks rose for a third day in a row on Monday, led by commodity producers amid growing confidence in the Chinese economy. The rupee strengthened after India's central bank announced measures to curb supply of the currency. The MSCI Emerging Markets Index added 0.6% to 956, the highest level since July 26. The Shanghai Composite Index advanced 2.4%. The Hang Seng China Enterprises Index of mainland companies traded in Hong Kong rose 3.4%. Taiwan's TAIEX Index climbed 0.6%, while South Korea's Kospi increased by 0.2%. Singapore shares closed 0.07% higher on Monday, boosted by the latest Singapore growth data. Singapore's economy grew at a better than expected pace in the second quarter, and the government raised the city-state's outlook for the year on expectations of a gradual pickup in global growth in coming months. Singapore's economy grew by 3.8% year-on-year in the second quarter, the strongest growth in 3 years according to the Ministry of Trade and Industry. The stronger growth also prompted the ministry to upgrade the official growth forecast for the economy this year to 2.5% to 3.5%. On a quarter-on-quarter basis, the Singaporean economy expanded by 15.5% in the second quarter, significantly higher than the 1.7% expansion in the previous quarter, partly thanks to the strength of the manufacturing sector. Global macroeconomics conditions are expected to pick up gradually in the second half, according to the Ministry of Trade and Industry. Simple technical analysis suggests that if the index can successfully break out through the heavy resistance zone between 3270 to 3300 points, then this would likely indicate a resumption of the longer-term bull market. However, closing below 3,200 points would confirm the short down cycle, which would send prices around the 3070 levels. Currently, almost all these market indices are available under our CFD indices list, plus many more benchmarks based on different strategies are available via ETFs for you to trade both long and short with Phillip. This is all for today, and hope to see you soon with another round of market commentary. Thanks for watching.